why Bitcoin ETFs signal maturity for Bitcoin, and why we're still early. Hey guys, it's Keith Allen. Busy day today, and it's getting away from me. So I wanted to see if, make sure I could get in and crank out an analysis for you guys today. So we're going to dive right into this, doing something a little bit different today. I feel like the simple fact that we even have a Bitcoin spot ETF is a sign that the asset class is maturing, and while demand has certainly been helping push price up, there's also signs that show just how early we really are. So we're going to dive into that a little bit today. But first, I just want to give a quick overview of what's happening with Bitcoin price this week as we're currently obviously seeing an increase in volatility. So again, limited time, so we're going to dive right in. If you like these streams, by the way, do me a favor, smash all the buttons. Share a comment, share the video, and help me grow the channel. But I really appreciate the comments and the support you guys have been showing me, and I engage with each and every one of those comments, so please keep those coming. Let's get into a screen share here and start real quickly with the candle chart. We'll look at fire charts, and then we're going to dive into this ETF stuff here a little bit. So on the liquidity side, obviously things have been changing. I said candle chart first, so let's go to the candle chart first. Obviously, this has been a number. Anybody that's been following me for a long time, for any length of time, knows that 69K has been very important to me. It's been very difficult to flip, and now we're finally seeing a solid attempt at flipping this thing, right? So we have now one full candle body above. We're in the process of developing the second one, and of course, let's continue to build on this. What I'm looking for is a consolidation in this range to get us up to all-time high territory, so we can challenge that. So people are wondering, how come we haven't broken out yet? Well, obviously this was a big issue for us, right? This is strong resistance here, but there is in addition to this technical resistance, there's also very strong technical resistance up here at 71.5, and I'll show you just with a quick line across the quick shot across the bow, if you will, that it didn't. What the heck? Oh, there it is. That we see a lot of confluence in this range right here, right? We've got wicks, we've got candle bodies, we've got resistance here. And so this has been a very tough level to break. We've had a little wicking above it, but nothing significant. And the reason for that is can be seen very clearly here in fire charts, right? We've had a lot of liquidity up at that level, certainly over 70. And some of that was taken out yesterday. We nosed up into this range, but just not quite enough. And in fact, let me take off some of this filtering so we can see how this has changed, right? Liquidity has moved in and out of this area, right? So earlier, last night, yesterday, actually later yesterday, we saw some more liquidity coming into the 71.5 range here. And that got lifted this morning. And surprisingly, I thought this was here to kind of lure in some shorts, and maybe that's exactly what it did, right? And then liquidity built here on the ask side, strengthened up to about 45 million, right here at 72K, and then a roof pull, right? Boom, left here and left here. Certainly not all of it, but blocks of liquidity left that place and it left this range, and it invited price to move up, which it did, but quickly got rejected here. So, we have another round. I think this all happened kind of around today's economic numbers. We had marginal increase in jobless claims, which is what Fed watchers want to see. And tomorrow, of course, we have another round. Unemployment is a big one, right? So if we see a spike in unemployment, it's not forecasted, by the way, but if we see a 4 handle here, that's not necessarily good for the economy, but it is good for Fed watchers because this is what they are wanting to see. Softening of the labor market like we're seeing here. If this goes down, then that contradicts what we're seeing up here. If this stays flat, okay, that's forecasted. If this goes up, it really supports what we're seeing here. And that would be a clue and a reason for the Fed to cut sooner than later. Certainly would probably quell the thoughts of another rate increase before this is all over and done with. So that's what Fed watchers are looking for, and as are we. So whatever happens tomorrow, I expect a knee jerk reaction. But the real move, the real clarity is going to come next week. FOMC meeting on I think it's Wednesday the 12th. Fed Chair Powell speaks. Nobody's expecting a cut or a hike at that point, but it is going to give us some clarity because Powell is going to come out with a statement and he's going to get interviewed by the media, and that's where the clues really come from. So that's where we sit at the moment in terms of Bitcoin. The fact that we have some liquidity here in the range is good, and this may keep us above the 69K level. We're obviously looking for that. A wick below it would invalidate the RS flip, of course, and keep us in this range here. So the question in terms of price action is: are we going to now have a new consolidation range, or are we going to fall back into the prior range? What's interesting here, and this is good to see, is that let me get these moving averages back up here, right? These are the ones that count here the most at the moment. We fell down into this range, tested the 21-day moving average, right? But look at the consolidation we had here. This was good. This was exactly what you want to see. A tighter consolidation is what we got, and now an attempted breakout here, which looks at the moment like it's trying to validate. But look at how tight this range is here. So looking to see if we hold this range here through the weekly close, the fact that the 21-day moving average is inching up to this level is good, because once it's above that level, that's additional technical support. So 21-day moving average right now is holding, and by tomorrow we could see it up above the 69K level, if not by tomorrow, the next couple of days. So that's good, right? Now let's talk ETFs a little bit, right? So ETFs have been on a absolute rip, right? We're now on 17 consecutive days of positive inflows on the U.S. domestic side. Yesterday was another good day, roughly half, almost half, actually a little bit more than half of what we saw the previous day, where we saw that bigger move. But still, this is a robust day of inflows for that Bitcoin ETF. And there's no denying that it has moved the market here, right? The demand. And of course, we now know that Hong Kong has come online with their own ETFs. And yesterday, Australia came online with their own Bitcoin ETFs. So that continues. But here's where it gets interesting. And I think that we need to put things in perspective here for a second. If you own Bitcoin because of the narrative around the US dollar, money printing, inflation, hedge against a failing fiat, then there is no replacement for owning Bitcoin, and owning or investing in an ETF does not fulfill that goal. An ETF does fulfill the goal of giving you exposure to the most amazing investment asset class that the world has ever known, and could potentially develop into digital gold is thrown around, whether it becomes a reserve currency or an alternative currency. That is still open for development. Really, we can speculate as much as we want. Doesn't matter what we want. We have to see how the world kind of reacts as adoption grows. So what these ETFs are doing is exposing Bitcoin, the underlying asset, to a much larger audience, and a lot more money, right? So we have these ETF flows going. We have these large institutions like BlackRock and Fidelity and all of these other entities that are in the game. And essentially they're giving us free marketing, right? They're marketing Bitcoin because they're advertising not just in the media, not just to their customers and marketing directly to their customers, but they're advertising broadly across media, including television. So that essentially is creating more awareness for Bitcoin as an investment asset class. And that obviously has a net effect of helping, right? The fundamentals are getting stronger and stronger. And I think that the ETF really builds the fundamental case in terms of a use case for the investment class of the asset. So there's a few guys. I don't, excuse me, I don't follow a lot of people very closely, on social media in terms of you know, crypto or Bitcoin or investment advice or any of the above, but there are a few trusted folks that I do stay in tune with, and I want to take you to a post I read earlier, and I shared it over on the Black Docs page from James Lavish, who really seems to be in tune to what's going on. Oh, by the way, in case you hadn't seen, in another on another note, Robinhood is acquiring Bitstamp. That also is going to change the landscape of the playing field here a bit. But back on topic here. Um, so basically, what James is saying is that institutions first add a tiny bit of Bitcoin to select portfolios, like we're seeing now, and really, it's for the most part as an individual asset class to invest in, and some may be adding it to other portfolios to create some diversification within those portfolios. But really, they start with a tiny bit, putting their toe in the water, so to speak, and that has benefits. In terms of their profitability and their risk management, et cetera, et cetera. But the bigger picture here that I'm taking from this is that this is really just the beginning, because once they find a level of comfort and they see that their clients are feeling a level of comfort, they're going to diversify. So it's not just going to be a standalone asset that you can invest in the Bitcoin spot ETF, but it's going to appear in other ETFs and in other portfolio, other funds, for example. And so that will be another wave, right? We haven't even seen really the second wave of institutional adoption coming in, but it's going to grow from there. It's going to expand from there. So this is really on the macro scale, speaking to the fact that we really can anticipate a lot more people investing into these Bitcoin ETFs. And we can talk about ETH potentially doing the same thing as well, right? That one likely going to hit the market sooner than later. So we'll probably see something similar, maybe not to the level that we've seen with Bitcoin, but that also is certainly going to have an impact on price, because these people need to buy Bitcoin in order to sell those ETFs to these institutions need to buy Bitcoin to sell ETFs to their clients. So the long game really speaks to the fact that a lot of these Bitcoin ETFs are going to be expanding into other portfolios, and that's going to make a difference in the long term. It may not necessarily mean a giant spike. It might actually be more of a slow and steady grind. And you know what the saying is, slow and steady wins the race. So, Caesar, hey, nice to have you with us. Glad to have you here, man. Appreciate the follows and the support that you guys have been showing me. And Caesar, I appreciate you being here and your comment. So if you're not following James, he's one that you might want to check out on the Twitter or the X or the Twix or whatever you want to call it. He's one of the trusted sources that I have been following along with Eric Backelness out of from Bloomberg. So I think those guys have a pretty good beat on what's going on the ETF scene, and have much more focus on how TradFi behaves than I certainly do. So I take cues from those guys. What they're saying makes a lot of sense to me. So with that, I'm running out of time. Last day of school for my youngest kid today, and I got a house full of girls coming to hang out and celebrate the end of school and the start of summer. So it's going to be mayhem here in a little bit, but wanted to make sure that I had time to get a quick analysis out to you guys. We'll take one last look here. Again, remember, tomorrow morning we have another bit of economic data. In my opinion, again, I'm no economist, a hot unemployment number. Imagine an unemployment number with a 4 handle on it could send price up, believe it or not. And if we should see a flat number, maybe a nothing burger, and we're just staying in the range. If it is a cold number, right? If unemployment is ticking down, if it's a 0.1% down, then we could potentially be jeopardizing this range. 69K right here. You see a little bit more liquidity coming into that range. There's not a lot there, by the way. It's it's like $12 million, right? So there's not a lot holding that up, but the fact that more is coming in and more is coming in above it is a positive sign at least this will dampen the volatility to the downside if we should have something, some news that wants to push things down. That's going to wrap it for me. Okay, always, of course, staying in tune with Purple Whales. By the way, I say it's a wrap, and it's almost a wrap. All right. You know what? Here's my cue. My internet connection is not cooperating with me. So I'm going to just go ahead and wrap it right there, guys. Have a great day. As always, please, if you like these streams, go ahead and smash all the buttons. Help me grow the channel. Share a comment, and I promise you, I will engage with it because I appreciate you guys. Thanks again. Have a fantastic day. Trade safe and manage your risks so you can stay in this game for the long haul.